Okay, hello everybody, and welcome to Investing with IBD for June 26, 2019. I'm your host, Arusha Pierce, and with me in the studio today is David Chung, Deputy Markets Editor of IBD and Senior Editor of Leaderboard. Thanks for being here, David.
It's awesome to be here, Arusha. Great to see you.
On today's podcast, we're going to talk about the markets, how to use news in your investing process, and, of course, we'll end the episode with some current stocks. But first, before we get in the markets, now, David, you have been here in IBD for many, many years. When I was a customer, I was reading your articles.
Well, thank you. That's great.
Yeah,
That's great.
Yeah, I learned a lot from your articles. Now, how long have you been here?
The same number as the $20 bill, 20 years, in fact. In 1999, I joined IBD as a markets writer, and I've always been a part of the markets team ever since. Big IBD fan, big fan of the way we pick stocks and write about them. I was actually covering Tokyo stocks before that, so that was a good introduction, but really learned practically all of what I know about the stock market here.
And you worked for Bill ONeil for many, many years. You must have some great stories about Bill.
Oh gosh, do we have a time for a full podcast on this story?
I wish we did, but I don't think we will.
I was going to share a golf-related story, but after talking with you in the prep, I thought, well, why don't we go with tennis? You know, the French Open just happened, Wimbledon's coming up. I'm a big tennis guy, at least in high school, and in a IBD event, Bill actually shared his personal tennis story, which I think actually has a lot of relevance to what we'll talk about today. And some people out there might know that Bill actually garnered the profits from two big retail stocks in order to start IBD in 1984.
Right.
And one was Pick and Save, and the other was Price Club out of San Diego. Well, in this story at the event, Bill was talking about how he was taking a private tennis lesson, made a great forehand shot down the line, and just stood there admiring his shot. And in fact, reenacted. Do you imagine this wonderful man in his 70s talking in front of a stage with 200 people, showing how he hit that shot, and just stood there and realized he made a big mistake because the teacher then hit a shot right to his backhand. He was totally unprepared. He was caught flat-footed, as you say in tennis. And the reason he brought up the story was to mention that you always have to be ready for the next big shot.
Right.
And so how's that related to those other two retail stocks? Well, he, as I mentioned, he made a lot of money in those first two stocks. One of them eventually merged with Costco, and that was a stock that he did not keep his eye on the ball on. So he had the humility, despite all this success and the supreme knowledge that he has about the market. He had the humility to share that story with everyone for their benefit. That you maybe had a great winning stock. Don't ignore any future big winners in that same sector.
Yeah, really don't let it go to your head, right? Don't think that you know everything in the market. You always have to be prepared. You have to be prepared to play defense.
Yes.
With the backhand.
Right.
But then also ready for that next shot too.
Totally. And I think our products are really geared to help everyone find that next winning shot after you make a good investment or a good trade. Just one quick example would be maybe some of you out there have traded or invested in Palo Alto Networks, PANW.
Right.
We covered in Leaderboard when it broke out of a base in 2014. It nearly tripled in price. And then afterward, well, since then, security software has been a very important dynamic sector in the market. This year, in fact, 2019, we've seen some real strength coming out of that same sector via Zscaler and CyberArk, CYBR.
But Palo Alto hasn't, I mean, they've participated, but not very well, though.
No.
I was always waiting for Palo Alto to get going, but they didn't, which means you always have to be ready for that next shot.
Totally.
And be flexible to go away from the one that you did well at one time and move on to some others that may be taking that market share.
Exactly. So every stock is like a story. It has a climax and denouement, and a conclusion, and then the story continues through another vehicle. So what we're seeing in stocks like CyberArk or Zscaler, we're seeing evolution in how security software is being used and implemented just a couple weeks ago, the front page of IBD Weekly carried a wonderful long feature by my colleague on the tech team, Reinhard Krause, who wrote about zero trust. So that's something that perhaps a Palo Alto or a Symantec might be just trying to catch up on.
Mm-hmm. Now, you brought a wonderful book here, the 24 Essential Lessons for Investment Success, written by William J. ONeil. And this was the book that got me started, David.
No kidding.
They mailed that book to me
Wow.
when I took the free trial, and I didn't read it for 2 years. It was actually still in the mailer, the little package, for 2 years. And then finally, once I had the motivation, after I lost a ton of money in the markets, I decided to open the mailer, open up that book, and I couldn't put it down. It changed my life. And that book is such an easy read. I usually recommend most people to start off with this book because really easy read, and it'll give you the motivation to keep going. I've never heard anyone describe the stock market the way Bill ONeil did when I read that book.
That's a great point. This book, published in 2000, just right at the peak of the Nasdaq bubble, was timely, and in fact, it was born out of a series of Q&As between IBD staffers, including Chris Gessel, our Chief Content Officer, and Bill, and then eventually became a book that's, as you said, super easy to read. There were two quotes I wanted to share with you. If we have time, we'll definitely have this one quote, and it's from the preface. And basically, as I said, it's 24 lessons, and basically, if you use IBD, then you're really getting the benefit of decades of research. I quote Bill, "We built models of the greatest stock market winners for every year going back to 1953. Stocks that doubled, tripled, or even went up 10 or 20 times in price. We analyzed and continue to analyze every bit of information known about these stocks to see what these big winners had in common before they made their biggest price moves." So isn't it inspiring, Irusha, right?
It is.
The fact that anybody can, first of all, use IBD's research and ratings and chart analysis to find the very biggest winners. And you have to be an optimist as well.
Absolutely. And I've been doing it for almost 20 years now, and you just see it over and over again. The only difference are the names, right? You just learn the characteristics of these great stocks, of what they show before they go on their huge runs, and then you just see it over and over again. So it's pretty incredible. It's a learning curve. You just keep going, and you do have to be an optimist. Absolutely.
That's exactly right. So for those of you out there who are new or had been burned by a stock in the past, just put that in the past, right? Because it's a new decade. 2020s will be a new decade. There will be new big winners, new entrepreneurs, new innovators, new opportunities. And so there's really no better time to get invested and learn. And the average winner that we found in IBD research takes about 18 months to go from pivot point to peak.
Yep.
So one can get a couple lessons from that. One, you have to hold it for a pretty long time, but it's not like a 10-year journey.
Right.
And two, over a typical bull market cycle, you're going to have a lot of opportunities to seize those big gains.
Yep. So now let's switch gears here, David. Let's go into the market. Now the market's in confirmed uptrend.
Yes.
And we have 2 distribution days on the Nasdaq, 1 on the S&P 500. I'm not sure if we had any more by the end of the day today. But distribution days, just down days on higher volume than the previous day.
Correct.
If we get more concerned, and you guys are watching this all the time at the markets team, well, maybe get 5 or 6 distribution days in a 4 to 5 week period. Going to get a little bit more concerned. So we're okay there.
Exactly. The market pulse does note the distribution day count every day, so the big picture is really the go-to source. Just even if you have 50 seconds of time while you're drinking your coffee in the morning, just check that market pulse and see what the distribution count is. And typically 3 or 4 distribution days can be managed, but when you get 5 or 6, as you mentioned, plus weak action among leading stocks, that's when the possibility of a change in our outlook could occur.
Yeah, and now you talked about weak action leading stocks. We had a little bit of weak action the last couple of days here. A number of our leading stocks got hit. I know my portfolio got hit. I felt it. But when you look, kind of take a step back for a number of these stocks, they're still above most of them are still above their 50-day moving average. They're still hanging in there.
That's correct.
And so there's still a chance for them. So the market's still saying there's still a chance. Leading stocks, for the most part, are still saying there's still a chance. And so a lot of times the best thing you can do is, keep, going with the normal, the prevalent trend, which is right now an uptrend, until you're proven wrong.
I think those are all great points. And keep in mind, too, if you only have 2 or 3 stocks in your portfolio, right, depending on what sector is getting hit, your short-term performance might vary quite a lot. But certainly what we've seen is that a small number of recent breakouts have just not made much upside progress. I point to names like OMCL, that's ONeil. We featured it in Stock Spotlight, and it recently, through today, completed, at least on this week, completed a round trip of a roughly 9% gain from its 84.51 buy point. Zoom Video Communications, right? This hot new IPO that recently broke out of a narrow IPO base. That buy point was 91.56, and it jumped 17% in just 10 days, but now all of that gain is gone. So one of the key rules we have for these high octane stocks is to make sure that when you have a double-digit gain, 10%, 15%, 20%, and you start to see negative action, don't be afraid to just sell the stock, secure some profit, and be ready to buy it back again if the market and the individuals show strength. Well, I guess the market is kind of on watch mode, right, for the G20. What kind of feelings are going to come out of the meeting between Xi and Trump, and also we have concerns about whether the Fed is going to make a move on interest rates in July. Plenty to sort out, but in general, the uptrend is still in place. We haven't undercut the closing price of the Nasdaq since that June 7th follow-through, and most of the indexes are trying to stay above their 50-day moving average. That's a very good technical indicator.
Perfect. So the market is back in an uptrend, but some leading stocks got hit hard this week and are testing their support areas. Now, a reminder, take a look. If you haven't read this book, 24 Essential Lessons for Investment Success, that's the book I got started, so I always have a special place in my heart for that book. So let's take a quick break here, but when we return, we're going to talk about what news is and how you can make money off of news, so stay tuned. Last week, over 12,000 people tried Leaderboard during our free access event. If you missed it, don't worry, you are in luck. You can try a full month of Leaderboard for the lowest price of the year. Now, Leaderboard gives you top-performing stock picks and optimized trading plans based on the CanSlim system. It's like having the IBD team doing your stock research for you. Try it out today for 1 month for only $29 when you go to investors.com/LB1month. We're back with David Chung on Investing with IBD. So, David, let's get right to it. What is news?
Wow. That's a big question. And I think that's a question I offered you
that's right.
to
You
ask me,
exactly,
right?
Yeah. What I kind of stumped you with your own question.
What did I do to myself? My gosh, right? As if I'm supposed to be the expert on news here. Gosh. But in all seriousness, I wanted to talk about something that hopefully provide a little more of the IBD perspective on topic, because clearly without news, you can't really have a market, right? The market acts on news, big headlines, whether they're related to the economy or what the Federal Reserve does or other countries do. Clearly, those market-moving news are something that every investor should pay attention. But the answer that I wanted to give today was really all about how the market is truly a great source of news that will help you profit in the long run. And so covering the stock market for over 20 years, being a journalist in both Japan and the United States, I feel like the wisdom that you get from paying attention to the stocks that we write about the stocks that make our tables and our screens, is really a form of news about what's to come, not only for the stock market or for your portfolio, but for society, for businesses, for the free markets, for the future of our economy. And so when you see a lot of our writing about breakouts from a certain sector, that is pointing out to the fact that there's a lot of demand in the economy, a lot of growth in that specific sector. And so one of the ways to really capture that kind of news is to make a habit of going through several of our stock lists every day. Specifically on the homepage of investors.com, we have stocks on the move. And these stocks on the move up and stocks on the move down, separated into two tables. And these are not only stocks that go up at least 1 point or 2 or 3% in price, but also see unusually heavy volume.
Right.
And so what's the news there? The news is that big fund managers from around the world, not just even the country, but around the world, see a great theme of growth or change. And therefore, if you pay close attention to that table alone, you get a real good finger on the pulse of the market and the future. So when you see, for instance, today, if you go to Stocks on the Move online on the homepage, you'll see a lot of medical healthcare stocks that were down in heavy volume. Why is that? Well, there's a little bit of concern about the future pricing of drugs, of the future reimbursement of healthcare services. And in fact, this is a Wednesday afternoon. We're just going to have 2 days worth of debates among contenders for the Democratic nominee for the presidential election.
Yeah.
It's a hot button topic, and the market clearly reflected that. So I would really pay attention to the stocks on the move table. That gives you idea of breakouts. In my mind, breakouts are news. They're telling you about a change in the character of the stock, the sector, and the stock market itself.
Now, you mentioned with the stocks going up on big volume or down on big volume and fund managers getting involved. Now, the reality is that these fund managers, for any of these stocks, if they're accumulating them, it's going to take them some time to get into it. They can't get their whole position on one day. It usually takes them a few months, right?
Exactly, and in fact, it can be years. We've done research on some of the biggest winners in the past 10 years since the major market bottom. We found that some of the biggest winners had sponsorship, as we call it, from top-rated mutual funds for 4 or 5 years in a row, quarter after quarter after quarter,
just accumulating,
maybe selling off a few shares here and there, right? But maintaining a nice core position. And we found that the best fund managers tend to attract more money from other fund managers as fund managers try to chase returns. There's definitely a herd aspect within the institutional realm of the market.
And so those stocks that are being accumulated, they're going to continue to show up on the stocks on the move.
Exactly.
Or if they're being distributed, they're going to continue to show up on stocks on the move, right?
Totally. That's a great point, Arusha, because when you see a lot of coverage about a certain stock through the stock lists or our features in news, in technology, whatnot, then that's a very important signal to you that maybe this could ultimately be one of those big winners of the year.
Right. Now, you mentioned a number of the IBD lists. Now, what I think a lot of people, and this is something that I didn't realize until I started working here, the IBD paper was really a whole screener for Bill ONeil. He designed the whole thing to really help him keep track on all these stocks that were slowly being accumulated, and they would keep popping up on the stocks on the move in the paper.
Exactly.
Or the new highs in the paper, right? Or the big cap 20.
That is right. You hit the nail on the head. Ever since he designed the original paper in a cabin in a trip to Oregon, right?
Yeah.
He's always continued to tinker and add this, take this out, and the paper really showed a lot of innovation. As one example, which lives on today, the stock tables, whether you see them online through the stock list section of investors.com or you look at the IBD weekly newspaper, the stock tables are not alphabetical order. They're based on which sector is leading the market, 1 to 33. And so I personally look only at those stocks that are in the top 5 to 10 sectors myself, because we know that the strength of a great stock is due impact. In fact, half of its performance is related to the strength of the underlying industry group and the sector too.
Yes.
So if you look at the paper now, software, aerospace, business services, retail, those are some of the big leading sectors right now, which gives you a lot of pools in which to fish from. And also want to just mention the IPO leaders, the sector leaders, which recently jumped up to 8 stocks, which is significant.
And that goes up to a maximum of
16 in
okay.
our newspaper, right? And so when you see fluctuations in the number of stocks in that list, that's also giving you some news about the strength of the market, especially for growth stocks. Finally, Big Cap 20. We're going to talk a little bit about some of the stocks in that list. Is a great, real fast look at what's really working, and also the IBD stock of the day, which is written by a variety of our writers every day, only on investors.com. But if you go to the research section, hover over research, you'll see the stock of the day page and click on that, and that gives you instant ideas, because we tend to focus on those that are near a buy point or just breaking out.
Any other ways that you're looking at getting news on the market?
Well, I could not finish this segment without talking about the G250, the Growth 250. In fact, in my mind, really far more important than the G20. Far more companies, obviously,
right.
than what might be in the conversations at the G20 summit. But no, seriously, the Growth 250 is an incredible screen. I believe it was developed by Mike Webster, right?
Yes, Mike Webster. Yeah, that essentially is Mike Webster's screen. He created 30 different screens.
Yes.
On it. He spent like 2 years designing, and really the goal was just to have one list, and so you just go look at this one list instead of running all these screens and trying to keep track of everything. Here's one list each week you can go to look for stocks that have potential. That's the main list I look at on the weekends.
I look at it every day, along with Ken Shreve, with ONeil and Sibia, 2 other fellow veterans on the markets team. And I look for trends. I look for trends in volume and price change and sector rotation.
Yeah, industry groups. You can see the industry groups kind of expand.
Exactly.
As more and more stocks qualify for the Growth 250, you're going to notice more and more stocks are in the industry groups. Like the restaurant group might grow from 3 to 5 to 10, in a short amount of time.
It's such a dynamic list. That's what makes the investors.com and MarketSmith tools so useful, because it's so sensitive to these macro and micro changes in the stock market.
Yeah, and a lot. And we spoke about the general market in the first section, and a lot of people when they start off, you're really focusing on the general markets and the sectors, industry groups, and then finally stocks. But over time, what I learned was that I get a better feel for the market when I'm looking at a lot of stocks, because you notice more of the industry group rotation. You start seeing a lot of stocks building bases when you're in a correction, and that's going to give you a heads up that, hey, maybe the market's ready to come out of this correction, or just like these last few days, or even in the fall of 2018, all of a sudden you start noticing a lot of leading stocks getting whacked. Before too much distribution starts collecting on the general market, you're already moving to cash because you're being forced to cash because some of your stocks that you're owning, they're giving sell signals.
Discipline is totally important. Knowing when to sell. Investors Corner on the website as well as in IBD Weekly gives you a focus on all those key sell rules so that you get out of the cash get into cash at the right time. And that's a great point, Arusha. And also, I definitely would like to add that you hit upon another piece of news for people really interested in growth stocks. It's all about which sectors are on the rise and which sectors are going to take a break. So that is really more important than listening to the opinions of 5 or 10 people you hear on the radio, on TV, or in print anywhere because we all know that opinions can be completely in conflict. So what do? The best thing is to rely on facts, and the facts come from the stock market and the stocks themselves.
So pay attention to how news can actually help you gauge the health of the market. Coming up next, we will talk about some current stocks, or how Dave likes to call les tres stocks.
Très bien.
Want to find stocks like the ones on this podcast? A lot of the best names we talk about come from IBD's exclusive stock lists, like the IBD 50 and the Big Cap 20. Whatever type of investor you are, we got a list for you. You can access every one of IBD's lists, plus stock ratings, exclusive analysis, and one-on-one coaching with a membership to IBD Digital. It costs less than $1 a day, but for podcast listeners, we're offering an even better price. Go to investors.com/podcast offer right now and get your first 2 months for only $20. We're back with David Chung on Investing with IBD. And now, David, let's get into some of these current stocks.
Excellent. I also want to apologize to our people much more knowledgeable in French and European languages. I did take a little German, so I consider it dry, the dry stocks.
Sadly, I took a number of years of French, and I didn't really learn anything, obviously.
But a shout out to our friends in France, especially given that I was actually in Paris 2 years in a row. It was a great time to be there, and then to see the Notre Dame in flames. Sad about that.
That's true. Yes.
A little shout out to them. Hope things are going to be recovered in full. So the first stock we're going to talk about, Irusha,
is Planet Fitness.
Planet Fitness. Boy, we have a big story about that, don't we?
Well, yeah. Well, Planet Fitness. Well, there are a couple things here, but now this is a franchise model where they're selling the franchises, and they really expanded over the last 10 years. I remember. I went to a Planet Fitness. I guess it was like in 2006 in Boston. It's a rundown part of Boston where I used to live, and they opened up this really cheap gym. And it was $10 a month. I was like, all right, that is perfect. And it was actually really good. The equipment was all great, and then they've just been spreading. They've been acquiring other gyms, and it's just such a great proposition. Now, not only just on a proposition because it's only $10 a month, because now it's for people who don't like to work out.
Yes.
They kind of prevent they kind of prevent the hardcore people who are the people who like to grunt and the people are really hardcore gym people,
rats,
right?
Yes.
Gym rats.
Right.
Where they grunt and stuff like that. They don't allow those people in there. They want to let the people who aren't comfortable, going to the gym. That's who the casual audience, I guess.
How could you refuse joining a gym that also offers you pizza? Right,
exactly,
to reward you instantly, right, for your hard workout. I mean, what inventive marketing they have. It's an amazing company. I wanted to talk about the stock because it's just wanted to show that this was a stock that, darn, I knew about it, at least a company like you, many years before its 2015 IPO. And why didn't I invest in it?
Right.
I mean, there was really a big mistake not to get involved with the stock. New issue tends, these new issues tend to be big winners. And the stock, according to our analysis, had broken out of a base all the way back in the summer of 2017. It was at $22.17 a share. That was a breakout point. Now, I mean, this year has hit $81.90, almost a quadruple. And so the lesson that I hope everyone can gain from this one is to really pay attention to what's new in your neighborhood, what's being successful or novel and innovative.
Yeah.
And they've completely turned the gym model on its head.
Yeah.
Right?
Yeah. Exactly. And pay attention to places where they give you free pizza.
Of course, that's right. They got to pass the pizza test.
That's true.
Right. And so it's interesting also to note that this week we don't know how the stock will end for the week, but it actually has shown some heavy selling and high volume.
Yeah.
So those who recently bought the stock and are seeing limited gains might want to consider just making sure to protect their profits. Those who have a much longer term cushion and a big cushion of profit can probably wait and see how it all shakes out, because who knows, Planet Fitness might build a new base. It's still well above their 200-day moving average, and during larger corrections, it actually found institutional buying support at the 200-day line. So, is this the end of the rally? Maybe, maybe not. It's not really clear. But in terms of fundamentals, boy, really, really strong. The earnings per share have grown from 38 cents a share in 2015 to $1.22 in 2018, and now they're seeing $1.54 this year. $1.54 this year, and then $1.90 the following year. Another reason I wanted to talk about this stock is that one reason I did not invest personally my own money in it is because I found that this stock didn't have a sales and profit margins and return on equity rating, the SMR rating. I was curious, why doesn't it have an SMR rating? And I found that, the stock actually has no shareholders' equity.
Right. Negative shareholders' equity.
That's right. And I find that interesting, and it's partly because of their business model. They invest heavily in these brick and mortar places, right? And so that one little detail, I think, prevented me from being super bullish in the stock. And this is a lesson for everyone involved too. It's like very few of your big winners are always going to be perfect on every measure. What offset this lack of shareholders' equity was the profit growth, strong cash flow, and just obviously a successful business. You can see it with your own eyes.
Yeah, I'm a huge market, right? A lot of people don't want to work out. So $10 a month may get some of those people literally off the couch, right?
Totally.
To go to the gym. Now they have the pizza to get them there too.
Exactly.
They're never going to get in shape, so they're never going to quit the gym. They're going to just keep coming. So now you're going to have that recurring revenue right there. And the perfect retention rate too, I'm sure, because you could really just pay $10 a month and just go get the pizza.
Wow. I never thought about that way, Risha. I thought they actually really wanted to go work out. But
I mean, it's a brilliant business model. Now, David, you mentioned the break of the 50-day on heavy volume. This is one of those kind of major sell signals or major warning signs, I'll say, because it really depends on where you are in the stock, as you mentioned. And so that was issued on June 25th. So that happened on June 25th. It was down 159%. On volume, 159% volume greater than normal. It was down 4.05. This is one of those leading stocks that got hit that was kind of giving a gauge that, okay, maybe this market needs a little bit of a break. Maybe the stock. So, maybe the stock needs to build a base. It doesn't necessarily mean it's the end of the run. We'll have to wait and see. But in the end, it's always managing your risk.
Well, if they replace the pizzas with maybe, I don't know, Impossible Burgers, maybe that will help reinvigorate the stock. Who knows? So,
That's true.
But you want to talk about the second stock?
Yeah,
Would that be Amazon? Or?
Yeah, I think that's a good little segue there. Here's Amazon. Obviously, we know they dominate retail. They're changing the whole landscape of retail. They have their Amazon Web Services, which was really the main catalyst for this monster run that it's gone over the last few years.
Totally.
Speaking of Impossible Burger, Whole Foods they own, and so they sell products like that. They don't sell Impossible Burger. They actually sell Beyond Burger or Beyond Meat there. And they're also starting to dabble into healthcare now too. They're making some partnerships, and they're starting to look into that. Obviously, there's expectations that they're, I guess Wall Street expects them to start to move into healthcare down the line.
That's a great point. I mean, Amazon really is helping define news and the future of the way we live and work and play. And I wanted to talk about Amazon today with you, Rusha, partly because the latest Inside the Big Cap 20 column by my longtime colleague Paul Whitfield was purely on Amazon. It appeared in the Big Cap 20, and Paul noted that Amazon has had 19 breakouts, and all of them have actually been successful. Some of them have had small gains, some of them have big gains, and he talks about the current base, the current, it looks like a cup with handle that's
huge
forming.
Cup with handle that's
forming by Amazon. We have this stock on the leaders watch list on leaderboard. It's a G250 stock, and it should be part of the G20 summit. They should really call it the G21. But in any case, Amazon is really acting very well, and it continues to have sparkling growth. Now, you know what's interesting here too, Irusha? a lot of people complain, well, it has no earnings, right? But they always focused on free cash flow. And it has super sales growth. So here's another example of a stock that may not be perfect in every little parameter, but it has great story, great fundamentals nonetheless.
Yeah, this is one of those stocks that for years and years, I felt like Wall Street would treat it like with kid gloves. Right, because they didn't have those earnings, but Wall Street gave Jeff Bezos the benefit of the doubt, and eventually they were rewarded. I mean, it took years and years because they just kept putting that money back into R&D and developing all these different innovations, like all the robots in the. If you go on YouTube, take a look at Amazon warehouses, where you see how many the big role that robots play in their warehouses now. Right, and so they're investing in all these other kind of innovation to make it that much more efficient and make it easy for us to get products at a cheaper price.
Absolutely, absolutely. So once again, if you want to look at Amazon or Amazon-type companies in the Big Cap 20, either go to the IBD Weekly newspaper. It's usually in the B section, the second section of paper, or on investors.com. You want to hover over stock lists in the main navigation bar, and then you'll see Big Cap 20.
And so Amazon built this really big cup with handle. The pivot point, the buy point, 1964 and 40 cents, according to the pattern recognition on MarketSmith. It's been resisting. It's been holding in there, hanging in there pretty well versus some of these other stocks like Planet Fitness over the last few days. It's just been really just slowly, methodically building this large base. They didn't really participate in the rally this year, which is interesting. But when you see this large kind of cup forming, maybe it's the large cap tech's turn to take the role or the baton and lead maybe the next leg up in the hopefully the next leg up in the market.
Very possible. It just goes to show, right? The FANG stocks, including Microsoft too, if you add that and Apple to the mix, that you still have to be selective, right? So, some of these stocks, such as Netflix is still also forming a base, but now there's a new competitor in online streaming, right, with Disney and so forth.
That's right.
And therefore, you want to look at each stock on an individual basis. And Amazon right now seems to be one of the better candidates for a future leadership role.
Okay, let's quickly go into one more stock here. TransDigm, ticker symbol TDG. And they're in the aerospace industry. They supply components and systems into the aerospace industry, into airplanes. And obviously, a lot of these airlines are upgrading all of their airplanes, right?
Exactly.
And so they're the supplier, and so they're benefiting from this kind of larger trend going on there. What do you see here with TransDigm?
Well, I think people who are aware of obviously the geopolitical tensions surrounding in the world, whether it's South Asia, whether it's the Middle East, will want to focus on these aerospace stocks, not just simply TDG, HEI, HAECO, and Hexcel, HXL have also been performing well. Boeing is trying to form a base as well. But I think TDG deserves some attention, partly because its most recent breakout earlier in this year worked very, very well.
Yes.
Produced a 20 to 25% gain. It was on leaderboard, and now it's recently broken out. Stumbled a little bit as the market itself has kind of cooled off, but has not delivered any defensive sell signals yet. And keep in mind that TDG, TransDigm, is part of a leading industry sector. It's the aerospace sector, and the latest IBD Weekly showed that sector ranking number 3 with almost a 30% year-to-date gain, price-weighted gain. So when you have that kind of momentum in the sector, that's generally going to translate into really, really superior stock performance.
Yeah, so when it broke out of a first stage base back on January 29th, went on a really, really nice run. So a strong uptrend, then formed really kind of the more ideal cup with handle. This was a nice small cup with handle around 6-7 weeks long. Broke out, is finding support around the pivot, as opposed to the large cup with handle at Amazon. This is a nice kind of smaller, tighter cup with handle. That shows that there's consistent buying coming into the stock. It's a second stage base. So yeah, this is definitely one you want to keep on your radar. And as David mentioned, a lot of these aerospace stocks are doing very, very well.
Totally. In closing, I just want to say that think of Wall Street truly as a parade of money going from one corner to the other corner. And so if you start to see more and more aerospace, or you start to see retail, or you start to see software, any of these groups start to pick up steam again, that means the institutions are likely putting more capital to work in those and maybe taking profits in other sectors. So be very mindful of this sort of daily and weekly news that we hope share with our readers and visitors to our great videos, websites, and other tools.
So keep an eye on these current stocks. Learn how to incorporate the right news into your investment process. And remember, we are in a confirmed uptrend, but be disciplined, manage your risk, and let the market tell you what to do. Thanks, David, for being here.
It was a great pleasure. Thanks again.
Next week, we're going to have Scott St. Clair with us on the program. He's a national speaker, product coach of MarketSmith, star of our monthly MarketSmith webinar, and racquetball champion. That's it for this week on Investing with IBD. I'm Marusha Pierce, and thanks for listening. And for this week's notes and charts, make sure to go to investors.com/podcast, where you'll find details for each episode in the podcast episode section. And make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube.
If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.